Today, I want to talk about how AMC is about to squeeze. I want to explain the various different indicators and all of the strange things that are going on that all point to a massive squeeze. So stay tuned and let's make some money. And now I'll dive straight in with the key information. So, the masked investor tweeted asking why is Doug Cifu at it again? He said, I just don't understand the risk or reward for him. Why is he talking down to retail and trying to convince us that synthetic shares don't exist? This is something I've never quite grasped unless we are absolutely right and that these banks and hedge funds and market makers are on the edge of bankruptcy. If synthetic shorting did not exist, what is the benefit for these shills and for these market makers trying to convince you to sell your shares? I think it's really important to understand the risk versus reward ratio for people like me and the masked investor who make YouTube videos and for these shills. For people like me and TMI, the risk and reward ratio makes sense because we're spreading facts and information for ourselves, we're spreading facts and information for you guys, and we're effectively compensated for our time by being paid for the YouTube adverts and for those signups. But surely for the shills, that risk and reward ratio doesn't make sense. Unless somehow the shills are being paid every single day for spreading this false information, trying to convince you to sell. It wouldn't make sense for the shills or for people like Doug Cifu to be posting every single hour of every single day because they'd be losing tons and tons of money and tons of time. Unless of course these shills are being paid for their time, and unless of course Doug Cifu is posting these tweets every hour of every day to try and save his business. By trying to convince you to sell your shares, Doug Cifu doesn't get paid for that. Actually, he loses potentially millions, if not tens of millions of dollars every single day by not focusing on his business. Obviously, every hour that Doug spends tweeting is an hour he's not working on his business, and every hour he doesn't spend on his business, he's losing hundreds of thousands, if not millions of dollars. That's why it always confuses me when I see tweets from people like Doug Cifu, from that girl trader Amy, from Spence and all of those other shills that are trying to convince you to sell your shares, because surely they don't get paid for tweeting. Unless obviously, as I said, synthetics are a massive issue and they are all paid off. As Peter Han tweeted, he said the liquidity fairy Doug is retweeting a post that explains to us children that naked short selling is impossible because the DTCC knows everything and surely wouldn't allow it. But as Peter added, he said, but the DTCC doesn't know everything. What if you create a short in New York, but pass it to your London office, or your Malta office, or your Nairobi office? Are these offices being required to notify the DTCC? Did Citibank Brazil tell the DTCC about the 500 million or so AMC ADRs? On top of that, we also know full well that the DTCC doesn't know everything because they're underfunded and never really read any of the complaints and never even read any of the data submitted. The DTCC operates solely on trust, trusting that people are even submitting data and trusting that people are submitting the correct data. And even if they weren't submitting the correct data, the DTCC never actually reviews those data submissions, so massive errors would never really be flagged if they escaped that automated system. Also, just a quick one, you can currently get a guaranteed free share of Tesla or of Google and a $100 cash reward with MooMoo. All you need to do is sign up using the link in the description below and make a qualifying deposit. And you could always use those guaranteed free shares to buy more shares of AMC, GameStop or of Ape if you so wanted to. If you wanted that $100 cash reward and 5 free stocks on top of that, all you need to do is make a $100 deposit. If you want more free stocks and guaranteed free shares of Tesla and of Google, just make the required qualifying deposit. MooMoo is also really easy to use. They've got tons of technical indicators and advanced charting tools as well. As Peter said, the fact is that risk positions are created which regulators are never aware of. And especially as Doug also has a credibility problem just by virtue of the firm he runs and the FINRA fines that he pays and continues to pay and has paid in the past. Especially as just 2 weeks ago the SEC charged an investment firm for that very same synthetic short selling that can supposedly never exist. And he said any so-called market plumbing expert that tries to tell you naked short selling is a deluded fantasy is a jerk and is likely a paid disinformationalist. And he said, why is Doug wasting his time and money interacting with YouTubers or regular apes? Surely he has more important things to do, unless these tweets are of paramount importance to save his company. This is why I continue to ignore any and all shill comments I see on my YouTube and also on my Twitter, because it just doesn't make beneficial sense for them to be posting shill comments every single day, every single week, every single month, unless they're somehow being financially compensated for it, or it's to avoid these market maker bankruptcies. So why is he happily losing hundreds of thousands of dollars or millions of dollars each and every day trying to convince you to sell your shares? And I think the reason why these shills and why people like Doug Cifu spend so long tweeting is because of just how close the AMC squeeze is. Obviously, I spoke about AMC being back on the threshold securities list in my video yesterday, and AMC is once again back on this list for yesterday, Monday the 26th. That's now the second consecutive day in a row, and on top of that, the cost to borrow fee this morning has skyrocketed even higher. In my video yesterday, I showed you the cost to borrow fee at around 200%, but just one day later, that's already increased back to 406%. We can see the cost to borrow average is 406%, cost to borrow maximum is 478%, and even the cost to borrow minimum is at 398%. That cost to borrow fee has doubled from 200% to 400% in just one singular day. And as this post on Reddit says, at this point the cost to borrow fee could be 5,000%, and these idiots would still have to pay it and could try their hardest to pay it, but would likely be in massive trouble. Obviously, even if the cost to borrow fee does increase to 5,000%, these shorts will still be forced to pay that 5,000% if they can afford it. But when cost to borrow continues to skyrocket more and more, it continues to become more and more unattainable for these shorts to hold their short positions. And as I said, there will come a point where not even Doug Cifu's shill tweets can save Virtue and Citadel from going bankrupt. As Troy tweeted, he said the fact we've landed on this threshold list 3 times this year already tells me one thing. He said it means that apes are holding and shares are becoming more and more difficult to locate because our current low volume pattern doesn't justify being on that regulation SHO list. Above average volume can lead to fail to delivers or FTDs, but we're not seeing that. So the only alternative is that we're holding and they are failing to settle. And he said, in my opinion, they know how to decrease the FTDs just a little to get off the list without impacting the price. As I spoke about in my video the other day, these shorts are using a very small basket of shares and passing it between each and every market maker in a big circle around and around again to ensure these stocks can be removed from the threshold securities list with a small basket of shares. But obviously, while that does temporarily remove it from the threshold securities list, it does not fix the problem of hundreds of millions, if not billions, of synthetic shares. And you may have already seen this morning, but 3, 4 or 5 individual apes have all had their Twitter accounts suspended at the exact same time, for the exact same portion of time as well. Daytrader POS tweeted saying, why are so many apes getting their accounts suspended for 3 days, all at the exact same time? Again, this obviously shows that we are clearly close to the squeeze and they're trying to do anything they can to soften our voices and trying to convince you to sell your shares. And this is also happening at a time when Robinhood has just laid off another 7% of its full-time employees. Now, I find this really interesting because Robinhood also recently introduced that 24-hour trading. Robinhood is trying to do anything and everything they possibly can to stay afloat. They're losing more and more money every single day and they're trying to stay above water, but it's obviously not working too well. Robinhood is likely going bankrupt and that alone may end up triggering the squeeze, or at least end up triggering a price run in AMC and GameStop, which could then lead to the squeeze after that. It would also be very interesting to see in the event of a Robinhood bankruptcy exactly who their associated parties are. It'd be interesting to see exactly how much they've been paying firms like Citadel for those payment for order flow transactions. And it would also be very interesting during those bankruptcy proceedings to see those private and confidential emails coming to light. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.